Hi everyone, I wanted to do this video to do a quick recap on a webinar, free webinar that I did right before the July 4th holiday. Some viewers had some technical difficulties accessing the webinar classroom and others could not make it. So regardless of the reason, I want to go ahead and give you the short version of what was covered in that webinar. So the topic for that webinar was 3 ways on how you can generate about 20K or more in cash in your business. So this is money that you keep. This is not revenue or anything. This is bottom line, how much cash you're able to keep at the end of the day. We all know the term, it's not how much you make, it's how much you keep. So that's what we're focusing on in this video is cash tax savings, how you can save on taxes and see the money sitting in your bank account. So I'm gonna do a quick recap of what was covered in that webinar. I completely forget to press the record button. So I did not press the record button, so now I'm doing a little short demo. The webinar was about 45 minutes, so you're gonna get a 10-minute version. The 3 things that I talked about include entity selection, pulling out cash out of the business, and this is tax-free cash, and also how you can maximize your tax saving with tax credits if you have employees. There's one easy credit that now that we're living in the internet age and most business has to subscribe to different software, their software updates and so forth. So there's a credit that it's pretty easy for every business to get as long as you have employees who you run payroll for. So this one does not apply to independent contractor, and we can go into that in a little more detail later. So when we look at entity selection, even though the new tax law has reduced the corporate rate significantly, but for small business owners, S corporation is still the money saving entity based on the amount of income you're making, because you still have to consider the double taxation of the C corporation. So even though the rate is so small, but when you do distribution based on the total amount of money you're going to take out on distribution, you're going to get capital gains tax on it. When you add both taxes together, you're ending up paying way more than what you'd have paid like if you're being taxed as a S corporation. So the S corporation is still the winner for business entity selection. The trick is the reasonable salary clause that you have to meet for the S corporation to make sure that you're able to determine your reasonable salary, so that you're still able to get the 20% deduction. So that's the play for 2018, is how much reasonable salary you're going to report versus how much S corporation income, so that you can maximize the 20% deduction. And then there are other factors that count. If you are in the excluded category for professional service based on the income limit, then you should be able to use the W-2 strategy while increasing the amount that you put on payroll in order to get the 20% deduction. I believe let me check, the limit here for single filer, for a single filer, if you're in any professional service category, that's the excluded category, you do not get this deduction if you make $157,500, and if you're married, if you make $315,500. Now, these are really not large amounts, but there's a way around it with W-2 and other factors that you can play around with in order to reduce your S corporation net income. The pulling out tax-free cash, there were 4 items that I talked about for pulling out tax-free cash out of the business. We look at reimbursing yourself for personal items used in the business, basically taking that cash, writing a check, transferring the funds to yourself. We look at the rent-free rule. If you have enough space at your home, or if you have a big enough or nice enough house that you think you want to use for entertainment, whether it's training a staff person or some kind of business event, anything that you can claim for business, you can find out what the daily rental rate for a comparable home your size is. And if you do that for 14 days, that amount of rental income is basically deductible for you as a business, but tax-free for you on your personal return. So this does not have anything to do with your business renting your home, you writing off your mortgage on your business return. This is the tax-free rental, which is only limited for 14 days. So how you can use this rule is to have events or training at your home, rent your home for the day to your business, find out what the fair rental value for homes in your area for that entire day is, and see how you can use that and also get that tax-free cash. We talked about hire your child to get a tax-free cash with a minimum of the $12,000. Plus, you can also add $5,000 in IRA contribution to your child, and that will also be tax-free. I have a previous post on that, so you can check that out for more detail. And the fourth one is if your husband and wife if you're shareholders in an S corporation, then one or a corporation, so this is for S corporation and C corporation, that you can also go on small vacations and use those as board meetings. So S corporation and C corps, on their legal structure, they are required to have board meetings. They are required to keep minutes and so forth. So if you own an S corporation and you don't have notes of minutes and so forth, know that you may lose your status if you get audited, because S corporations are required to have board meetings, no matter, even if it's one shareholder. There's some kind of, you can do it quarterly, just have some kind of planning meeting. But if you're a married couple and you're in the same business, this is an opportunity that you can go on a vacation and also claim it on your business, as long as you're able to account for how much of this planning that you did or what the board meeting cover during this time that you were on vacation. Then you'll be able to have this written off on your business. The trick is international locations are excluded. So don't go to Jamaica or don't go to India or Europe. International vacations become pretty tricky, and I'm sure that you can think of the obvious reason, but there are a lot of cool, beautiful places in the United States that you can go, take a long weekend, a 4-day weekend, 5-day weekend, and relax, recharge, talk about business, what you're gonna plan to do for the rest of the year. And now is a great time, since we're 6 months in the year, to do so, and also have that trip tax deductible and get personal time for your vacation. So if you're not a husband and wife business, then you can look at other business vacation rules on how you can combine some business and personal and have the total amount tax deductible. The last one, the third point, is how you can get tax credit to offset the cost of having an employee. So with the internet and how business owners are able to use different software subscription, whether you're an attorney, a CPA, an engineer, or any professional, there's a increase in software and subscription costs. So if your employees do have access to those software subscription, if they qualify, you can actually get a state credit for a portion of the salary that you're paying them. Each state have their cap per employee, but pretty much it can cover some of the cost of having an employee. If you have 2, 3, 4, 5, it doesn't matter if they have access and you to this program, and if there are updates. Normally what you can look out for is when those software push out different updates every year, which pretty much most programs will do this, and when they have to do training. So it doesn't have to be a sit-down training. You don't have to hire a consultant or anything like that. You just have to, your employee just have to account that, okay, this software changed the way that I pull this report, so that's something new that they have to learn. So you can look at retraining credit. That's the name of it in majority of the state. Here in Georgia, it's called the Georgia Retraining Credit, and it can be a pretty significant amount of credit, especially if you have 2 or 3 employees. Even if you have one employee, it's worth taking a look into. If you're the only employee, like if you're a shareholder employee for your business, then you will not qualify because you are the shareholder. But whether it's your admin assistant or any person that you have on payroll will qualify for the credit. For more information, I have a write up above my head in this post, so you can also check that out. And for other detailed posts, you can subscribe to my list to get webinar updates and other information. I will post the link because I don't remember what the link is. So you'll see the link to subscribe, and I will post other information throughout the year. Thank you.